Happy Monday, day traders. Here is François Blais. I believe that you got in and spend a nice weekend with your family and friends. It's the first we're officially in the spring. So yesterday I got my first barbecue, so it was awesome, and I believe that you doing like the same thing because it's the best time to be outside and not just stay at home, right? We're starting to have like a great weather uh, here in Ontario. So I greet all members and all people which is follow our daily and weekly global strategy. Thank you for the support and for everything. Keep it going. Keep it to share this channel, to like all the content. It's just bring us like. Enjoy, and he will keep us to continue to for giving this financial content and democratization of the and the financial economic also activity, right? So it's very appreciated. Thank you so much for that. Okay, so you came here for knowing what will potentially happen on this financial week. So let me doing that for you through this proposal, which is the weekly market analysis. Okay, so just before to going moving forward, I will just reading the disclaimer. It's very important, so please have taken note for the disclaimer. If your first time to discover us, you can also find us through the our website, which is www.globalstreettrader.com, right? And here's the disclaimer. Okay. Perfect. So now let's jump to the our global analysis. So we used to see the USD CAD, Dow Jones, gold, Eurobond every day, every week. Sorry, and now it's also we starting quickly to be like mastered, and that's great because it's just take one of asset of different categories, and that's what we want because we can like find all the product, and is unnecessary to do that. So that's why we used to see just like one asset in different categories, which is giving us like the an overview of the global opinion of the market. Okay, so here is the USD CAD, our favorite asset in forex markets, right? So USD CAD, it was a bit tricky the previous day, the previous week, but now it's starting to be very clear. Don't forget that I prepared these charts and the markets too at the Saturday, let's say morning, right? And those line here, I drew that also at the Saturday. And my expectation in USD CAD was to that we have to come to see to to take come to or drag the market have to drag here and be and touch the line here between dollar 34 030 and dollar 33 and 830 before to going on long position, right? And guess what? From the opening of the market at the Saturday during the night for sure, like around 5 p.m. here in the Eastern time zone, we came here to do a first test and starting to going for sure up, right? Because I'm bullish on ESD CAD in this week. But before that, I intend to buy the ESD CAD here, but I miss this opportunity because the market has already did that, right? We can see through the different time zone here or the time frame, we see clearly that the market is very oriented to going on the top because I used to today I put the Bollinger Band, and we see that it's clearly oriented to the up because we see the spread of the Bollinger and it's starting to have like a massive acceleration of the volatility, and we also saw that the moving average of which is represent the spread in the middle of the Bollinger Band, have it like crossing my moving average for the quarterly moving average here, right? So we clearly see that we very oriented to going up, right? But instead to see also the moving average, I already also described how the market is now is oriented by the I can just hide that, right? Look at the double bottom here for can I see here? Well, so this is the double bottom that we now starting to trade with that, and this double bottom like play and act seriously on the USD CAD. So we clearly see that we oriented to the to be bullish, but if you want to buy it, just waiting that the market come until this zone here. We already did the first test right there, like a $34.030, and I was also expecting more lower, so around here before to going to going long. But if we coming over like we coming over this red zone here and close above that in a short-term time frame, then you can for sure take a position long to and accelerate until the orange zone here, which is represent the top of our lateralization movement here, and it is still ascending. So we definitely and clearly observe by to buy USD CAD. We can also see that and measure this behavior by the DXY, which is the dollar index. Dollar index was like a low with the announcement for the Fed. We have the massive recover. We also going above our POC, weekly POC for the seller. And as I said to the first like the previous intervention last week, as I said to you that when we break this blue line here, we quietly have like a massive acceleration for the market. That's what the market did, but I was still skeptical as I described for the fact that the market have short sharply this news where the Fed was quietly neutral, but they interpreted as dovish because they said before to the end of 2018 that they intend to increase the rate interest 3 or 4 times this year. That's why we see this kind of movement. But we do have like a pretty much recover. Some people like said we do also validate in a head and shoulder short term, but it's true that the shape is that, right? We can see it quickly head and shoulder here, but I'm not a fan of chartism. Sometimes I use that, but we have to be very careful with that because most of people could see like so many times the pattern on every market, right? But it's great to for study the behavior properly of the market, but don't be stuck with that. Just analyze purely and roll the market to have a better opinion, a better vision to see what the market is supposed potentially going, right? So DXY is oriented is a kind of like stabilization, and the CXYs, which is the Canadian dollar index, also keep continuing to be down because we do have like a bearish bias on that, right? We'll see after the end of this financial broadcast. I will explain you why Canadian dollar is still in a bearish. So that's why USD CAD is still oriented to bullish. So it's just too bad. I just missed this opportunity here to buy here or buy here, but I still like observing the market and just waiting that the point come to in this zone before to going long, right? Okay, so let's now jump to the DJIA, which is Dow Jones Industrial Average, right? Can activate our Bollinger Band. So right? So I expect that the market doing even the fact that it's oriented to be to be bearish this week, but I expect that the market firstly doing is a quick recover based on the fact that we could see some of exaggeration of the market at the end of the week, because we will see why the market was so like so worrying about the inverted yield curve for the 3 month and the spread between 3 month and also 10 years. But personally, I didn't use the 3 month. I just used the minimum, the 2 years, and also use the spread for 2 years and 10 years, right? So for me, the inverted yield curve is not again inverted. Yes, for sure, it's starting to be inverted at the spread between 2 years and 10 years, but it's not like completely official. So I don't want to worry about that, and it's not just the only things on the market. So I will just put in for you if you want for this spread between. Let me hide the indicators. So the spread here, the bond yield right there. Okay, enter. So you see here, right, at the okay, right. So for sure, the line, the starting block here was at on the top for the zero line here, and each time that we starting to do like a peak, right, a peak of this line here. That's why we have to worry about. If you take a look on the different historically time behind us, we saw a couple like a sharply movement based on the previous recession on the 1994, which is that the bond crash market, or the oil market. We saw also 2008, right, the recession for 2007, 2008. So we pretty much at the same level that we starting to have like a warming on the index, right? But they still also have a quite a progression before that we starting to be inverse, right? But if you take here, you see 2008 we were inverse, right? Because the markets have a bullish movement until here. We have the tangent of the markets right there, right? And the market has been inflexibly downturn, and then we going to the crash market, right? So we quietly it's almost right, but don't worry about that, because we do also have like a progression to have, and the market we starting now to be a reversal, right? So it's not the time to worry about the index. There's others criteria that the market the warming has come. We also see that for these manufacturing sectors, which is the biggest and the most biggest sectors for the United States, worry about the fact that there's no access to the credit, the easy credit for financing the activity and make and keep going the productivity, right? So economically, it's very difficult to find the money to and support these big sectors. So that's why the all index, especially Dow Jones and also S&P 500, are worrying about this situation, right? Is about just the financing and the money, where the money is supposed to come and then go into these sectors. So that's why we see a sharply movement for downturn on the end of this previous week, and it's starting to kind of validating the we have a nice technical observation, which is a double top, right? We have a double failure here, as you see. Let me okay, right? And this is the neckline here, right? But the signal is the white line, because white line here is a kind of POC of the weekly. So I expecting to have this kind of movement just for have the so another test before, and then the market, if it's fail again here, then we can have like a massive movement for short, right? So don't be don't be rush on that. Just waiting the perfect level, then we can starting to have a bearish strategy. So let the market breathe again a bit, and then after that, looking for the highest point as much as possible, and then we can go into to short. Or if we break directly the white line zone here, then you can starting to do to be short, right? So just waiting how the market will react at the opening in 2 hours. Okay. So let's go now to the gold. So gold is very tricky also to trade gold. And personally, I'm bearish on gold if we fail this line area here, the red zone here, because we're supposed to have for sure in support based on the fact that the US the yield, right? I just come back to the yield, the bond yield for 2 years, right? You see that? So the bond yield, it's definitely bearish, right? We also have a zone here that we starting to test. And the bond yield, it's very correlated with the gold. Why? Because the yield is when people it's just measure how people want to take a risk to collect debt in the different different time frame, right? In different or short term time frame, because it's just for 2 years, right? And when usually when the yield that is going it's going up, we could see that the gold starting to be bearish, because people don't want going to the like no people are want like have appetite for the risk, so they could like invest in the index market. They could invest to the bond, so they can borrow money as a like lowest cost, right? When this zone here going or this market going up, usually the index is starting to they want to take this risk, right, on the security market. But when the yield going down, we could see that a transfer of flow of the money and it be reinvest to the gold. But at that time, we saw a kind of decorrelation of this historically or empirically observation, and especially for the gold. The gold here has for sure a bullish long-term vision, bullish vision on the long term. But the fact that it's not clear about the dollar index, because if the dollar index strengthen and starting to be very or playing the role for as a safe asset, it's putting pressure on the gold. And the dollar index also is still correlated with the 2 years, right? The US 2 years on the market. So the best thing to do is just for waiting the gold, treat as an investment, and just buying the gold at the lowest point as much as possible. If you day trading for the gold, for sure, if we fell to the $1,320 here, I intend to short that until $30,305, because this line here is the middle one of the gold since the first month of this year, 2019, since January, right? And if as long as we keep up on the $1,305, I'm assuming that the gold want to be a bull, right, on this market. But if we just stay around here and we doing a lot of failure, because this looks like an ascending wedge enlargement, right? It's a widening ascending wedge, and it's very difficult for trading that. But we pretty much know that in 60% that the market is supposed to going down then going up, right? So we just want that the gold will potentially fail in this zone around here on the highest point as much as possible. Then we can intend to short the gold until this level. And if we break this level, the orange line here, then we're probably going to test the pink line here. But as long as we keep we stay up or above the $1,305, the gold will potentially rebounds, right? So very tricky market, and that's why I told you to not day trade on gold. Just follow that as the an investment or long position on the gold. Okay. So the bond market is always the same song. There's nothing to say newly. It's just to follow this movement because we do have like TR01, the 2. We are now in the 3. So, and we saw recently that Danske Bank and Commerzbank and also Deutsche Bank want to be merged all together. So it's starting to for merging all the biggest German banking systems. So it's a kind of measure to buy back all the debt and all the assets. So this measure is a kind of supporting the economy, so be a commodity economy. So that's why this measure, if it's it's all official. That being said, the ECB will prepare an emergency plan for support this banking sector. So that's why the bond will be probably also the best thing to do, as to buy to be long on the bond. So nothing special here. I always said that to you to the previous intervention. So it's still that, right? The moving average, keep it on the top, and then the time as we keep up, the market we going to pushing is bullish movement. Okay. So here it is a recap for the weekly market strategy. So as I said, forex for the USD CAD, I'm still bullish. We clearly close in massive bullish weekly candle. So we have definitely bullish expectations in this upcoming weekend or week, sorry. But we have just to wait until this zone properly, as I described. So before to going long. So don't be on a rush. Just waiting at the market giving this zone, and then we can go on the entry. Why? Because Canadian inflation is stable, but the retail sales declined sharply, where you were expecting to the 0.4%, and the actual is minus 0.3%, right? Is very a big deception. So it's putting a bearish bias on the CAD. Also, we have been reintegrating and recovered the last sell-off movement on the 96.45 points on the DXY, like the blue line equa that we saw recently. And this level was the weekly POC for sellers. So now the buyers are strengthened, and we do have like a bullish bias on the US dollar, based also on the fact that investors want to make playing the role for the safe assets on the market, the dollar. So that's why we have this bullish disposition on the dollar index, right? Also, it's putting for sure pressure on the DJIA, so the Dow Jones Industrial Average 30, and we have strongly closed with massive weekly rejection candle. So this week we want like it not smelling good, as I said, because but don't try to for sure to short definitely the index. Just wait the market like breathe a bit and give you the best price or best zone for shorting, as I described. Or if we break in the line, the white line here, just like quickly to do a recap, like this zone, the 25,400 here. If we break it directly and close above, close below that at the short term time frame as 4 hour, for example, then you can starting to be bearish. But at that time, just wait. The markets have a recover until this zone and fell again. Then you can have like a great confirmation, a great trigger that the Dow Jones are very under pressure, right? So that's why I want to say that. Okay, so potential tariff sanction still over in Iran and North Korea, low expectation on global oil demand, major slowdown of European economic area, especially Germany, with the bad indicator, very bad indicator for ZEW, and it's for the three or 4 times consecutively. So it's a kind of recession, upcoming there. We're starting, the pre-recession with Italia. Now is the turn of the Germany, and after probably it's going to the France. So the 2-year and 3-month bond yield look invert for sure, but institutional traders worrying about that, and it's a kind of warming signal of global index. So that's why we're starting to be, going down on the index. But again, just wait the market breathe a little bit up before going short. Okay, so here is all the briefly, like broadly, the weekly market strategy that I want to share with you. Thanks so much for watching this video. I don't want to make long, and so please share this video content, this channel. We're very underrated because we put a lot of great content, and I do appreciate that. So support this channel, and I will talk to you soon. Okay, see you. Bye bye.